Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Day one of the Trump hush money trial deliberations is done. Joining is Bloomberg legal reporter David Voreacos. David, thank you so much for being here. I know you covered every day of the trial, so you have seen firsthand what the jury is deliberating. Let's go through the day here, starting with instructions, and we'll get to the notes because I know you know that. Looks like it took about an hour. Did Justice Merchan go through all 34 counts, do you know, or was it more general?
Justice Merchan, who is overseeing the trial, gave the jury legal instructions on how to apply the law to the evidence they heard in the 5-week trial. He didn't actually go through the 34 counts. That's what the prosecutor did in closing arguments. He explained different legal concepts to the jury and advised them on how they should deliberate. And that took more than an hour. And the jury, in the later part of the morning, went to deliberate. A couple of hours later, after a lunch break, they sent a note back to the judge, and they asked for the testimony about 4 topics, but basically it centered on a meeting that was held in 2015 that prosecutors say is key to the conspiracy at issue in Trump's hush money trial. And this was a meeting in August 2015 that Trump attended at Trump Tower with his former attorney, Michael Cohen, and the National Enquirer publisher, David Pecker. And so the jury wanted to hear what Michael Cohen had to say when he was on the witness stand about that meeting and what David Pecker said on the witness stand about that meeting.
Yeah, now that note, and of course it could be the beginning of many, it looks like that was a key point tying that meeting in the prosecution's case. Are they going, does it look to you like they're going chronologically through this then?
That's a distinct possibility. It's hard to know for sure, and we wouldn't know that until after they deliver a verdict. But that's quite possible, and juries often do that in complex white-collar cases like this one. They may say, well, this is how the government's laid it out. Let's review the evidence and see if it checks out.
Okay. Now, a second note later in the day was given on a clarification of some instructions. Do we know specifically what that was or what it encompasses?
They essentially want to hear Judge Merchan's legal instructions all over again. He read them today, and after they deliberated for about 4 hours, they said they want to hear the instructions again. It's anybody's guess what that means, but it could be that there's a dispute over how to apply some aspect of the law to some area of the case. It could be that once they got into it, they realized just what they are getting into, and it was time to really pay attention to what the judge wanted them to do.
Yeah, now you have a huge amount of experience with this, David. It looks like it's not a slam dunk either way. It looks like they really are, at least some of them, and at least the foreman or forewoman is really wanting to go through this with kind of a critical thinking eye and figure out what the judge meant.
It seems clear that's what they're doing. I mean, this is a historic case in U.S. history, and I think the import is not lost on the jury. They know that a lot is riding on this, a lot, having to do with Donald Trump's political and legal future. Mm-hmm. They're aware that there's a tremendous amount of media attention on this case, and so they want to take it carefully and deliberately.
Yeah. Now, the judge did spend some time, Justice Merchan did spend some time talking to them about not taking into account that political process. That's hard to do, but to adjudicate based on law. Does that have any hold, or are they still going to, as you say, go and go through the politics of it?
Well, I think they're going to go through the evidence and the law. And the judge asked them to leave their political biases behind. And so the question of whether they can completely disregard all of their life experiences and their beliefs is not really relevant, because the judge and the lawyers realize that everyone brings something into the jury room, and they can't leave it all behind. They just have to promise that they'll look at the evidence with an open mind and be fair and unbiased. And that's what the judge is asking them to do. That's what he asked them to do at the beginning of the trial, and that's what he wants them to do now. And I should also say that while Trump has consistently criticized the judge and the district attorney, Alvin Bragg, as biased and not giving him a fair trial, this trial has gone for several weeks, and he's had a chance to present his evidence and cross-examine witnesses, and we've gotten to this point so far.
Well, now I want to follow up on that, David. Sorry to interrupt you. We have about a minute left. Trump did come out today outside, address the media. He did not do that yesterday, and he said that Merchan should end the proceeding to save his reputation. Is he gagged at all at this point?
There is a gag order about him, but it does not prohibit him from talking about the judge or, the district attorney, Alvin Bragg. He's not allowed to talk about witnesses, and he's not allowed to talk about the jury. The jury is deliberating. It's unclear whether that will remain in place after the trial is over. Okay.
All right. Hey, David, thank you so much. And I know you're you're in the courtroom tomorrow, so we'll be checking back with you. That's David Voreacos, who is covering the Trump trial, has been from opening statements through now. We appreciate your time.
Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. So you like NVIDIA, you like Freeport-McMoRan, and you like Lilly. So those are three big trends, with AI being the first, and then obviously copper the second, and GLP-1 third. What's interesting is that all three of these areas have had a good run this year, but basically across the broader markets, we've kind of stalled out over the past 2 months. Very strong first 3 months, roughly flat during April and May. So to you, Larry, is this a welcome consolidation, or is it a sign that, we've topped out for the year?
Brian, thank you for having me on. So I do believe this is a welcome consolidation before we test higher. The first 3 months were fairly strong. April, we had a bit of a pullback, but we've had a nice recovery to new highs, which I think is technically very bullish.
Do you not worry about the macro? We've had some pretty weak bond auctions here of late. It's driving yields up a little bit, and that's happening at a time when there are at least a few signs that jobs and growth may be slowing. Again, depends on whether you think that's welcome or unwelcome. But does the macro concern you?
It does. And I do worry about two things. I worry about bond yields because I don't want to see bond yields break out over 5%. But my biggest concern is inflation. Inflation's really stalled out over the past 4 months. So the Fed's target is 12-month core PCE. In December, that was 2.9. And over the past 4 months, it's only come down 10 basis points to 2.8. So inflation, that last mile has been very sticky, and that is a concern for me.
one of the interesting issues is that if you took out the owner's equivalent rents and some of that kind of stuff that's in there that they don't use in Europe, the numbers would look a lot more pleasant. I know it's like, these are the numbers, this is our system, this is what we do in the United States. And I guess when you talk to people, they still are very concerned about inflation. So no matter what, it's still an issue, right?
Yes, absolutely. And I think the Fed is really dialed into that 2% target for 12-month core PCE. I'd like to see it come down on Friday, but I think until it really starts to come down under 2.4, under 2.3, I don't really see how the Fed could cut interest rates right now.
But if the average wage increases are up around 4%, over time, if inflation's running at 3 and you're getting 4, you're still doing okay, right?
That is the math. But I think the Fed is really dug into that 2% target, and the market is really focused on the Fed.
I think it's great you brought that up because, there's the math and then there's sentiment. And they cross over, but they're sort of different. You talk about, if market interest rates are up a little bit, yields are up a little, companies are doing fine. Sure, on the math side, there will be, higher costs, but not everybody is borrowing money. And so not every company is so exposed. But then you got sentiment, and sentiment is a little trickier.
It is. Now, the good thing is consumer confidence came in Tuesday at 102. Which was above forecast. So I think the consumer feels good. Their 401ks are probably near the highs, with the markets near the highs. Consumer confidence is strong. But I do think that inflation, I think we're still seeing it in food. We still see it a little bit at the gas pump. So it's mixed as far as the signals. But according to consumer confidence, the consumer's feeling good and they're spending money.
So one of your themes is AI, and in particular, NVIDIA. There would be certainly some investors that would be uncomfortable with the rapid gains of late. But you say if you look at the numbers, if you look at the growth rates, if you look at what they're actually delivering, it's not that expensive. State your case.
That's a great point. So NVIDIA's earnings over the past 12 months, net income is up 628%. Their revenues are up 267%. The stock itself is only up 195%. So as much as NVIDIA stock has gone up, it has not gone up as much as the earnings.
It's getting cheaper, isn't it?
Well, it's staying about the same. Here's the growth story for NVIDIA. Projected earnings growth over the next 2 years is 59% per year. It trades at a 32 forward PE. So I would make the argument the S&P is projected 10% earnings growth and trades about 21 forward PE. So I would make the argument that NVIDIA is at a big discount to the market.
Yeah, absolutely. And that's why I say that it actually feels in some ways cheaper, that forward PE of 32. If you go back a couple of years, it was, arguably around 34. Larry, thank you for joining us. A real pleasure. Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Well, joining us now on the program for discussion of markets and economic growth is Belita Ong, Chairman of Dalton Investments. Belita, always a pleasure to get your insights. So the weaker bond auctions here have driven bond yields significantly higher. It is rattling markets for sure, in that I guess it suggests that, you could get much higher market interest rates at a time when growth might be slowing. Do you share those fears?
I've been concerned about the supply of debt and the need to refinance for the Treasury as well as regional banks in particular for quite a while. Corporates are in good shape. Investors, individuals are in good shape because many of them locked up long-term mortgage rates at very favorable low levels. But banks and the Treasury aren't in such good shape. So It's a problem that we'll have to deal with unless the Fed cuts interest rates and the economy sinks into a much lower growth path, which I don't think is going to happen soon. But that seems to be what could save this scenario of credit going badly.
Well, it's always tough to know what's welcome and what's unwelcome. A welcome cooling in growth and in inflation is one thing, but an unwelcome or rapid cooling is another. Where are we at the moment?
I think we're in an unwelcome phase. And the simple reason is because we have a lot of things that are out of whack. We borrow too much, not just the US, but many countries, developed countries around the world. We are moving from a unipolar world to a multipolar world, if you like, and that takes, building of new supply chains, new relationships, which is not helpful for productivity in the near to medium term. We're doing this transition from the traditional economy to a greener world, which we need, and that's also costly. With the increased geopolitical tensions, we're also setting more money aside for defense, which is another problem. So then there's a lot of competition for capital, which is just difficult for financial markets. So on the other hand, so it's not all bad. On the other hand, we have AI, which is extremely promising, but it's uncertain that it will help things dramatically in the near term. But over the long term, it should help a lot.
I have a huge respect for you, Belita, but I mean, if you're looking at overall conditions in markets, you've got nominal growth around 3.5% in the United States. You've got inflation that's come down from 9% to something close to a 3 handle, a little bit less than that even on PCE numbers. You've got, as you mentioned, you've got a killer app out there with AI that is giving companies just a lot of fuel for growth in the future. I mean, if you don't like this environment, what kind of an environment do you like?
Perhaps I'm just too conservative fiscally, but I'd like to see a government that's more responsible fiscally. It's just, it's just kind of how I'm wired, I suppose. I'd like to see a government be more responsible and not just keep kicking the can down the road. This seems to be the MO for many countries. It's not that I'm just critical of the US, but in Japan, we saw what happened when they kicked the can down the road in the 90s, led to 3 decades of very slow growth and very poor returns for investors. And it's happening in China right now. I don't know how long this will go on for, this malaise in the property market. In the US right now, we're benefiting from a very strong dollar, which is great, but I don't know how long this will last either. So
all fair,
we'll see.
All fair points for sure. And I note that on your list of top conviction trades, the U.S. is not there. You've got Japan, India, and Korea, and China's not there as well. So that in itself tells an interesting story. And when we've had you on in the past, I know you've been very cautious about China. Let's save that for a few moments. What do you like about Japan at the moment that you didn't like a decade ago?
The biggest change in Japan is corporate governance reform. And the reason it matters now is because when the Japanese government tried to reflate the economy, they were successful in that corporate profits rose dramatically, but the profits didn't go to the consumer, which is why we've had such slow growth in Japan. And it didn't go to the consumer because companies decided to keep cash on the balance sheet. So with corporate governance reform, companies are being forced essentially to start distributing that money back to their investors through higher dividends or through share buybacks. And because of the change in the acceptance of hostile bids, you're now seeing private equity coming into the picture. And there's a vast discrepancy between where Japanese companies are valued on a EV to EBITDA basis, which is, the price you pay as a private investor, which means that you take into account the cash they have and the debt they have. It makes the companies look a lot cheaper, and the private equity price that's available out there. So there's huge upside, we believe, for Japanese companies.
Do you see some of the same changes afoot in Korea?
Not yet. It's, we invest one company at a time. So when we look hard at Korea, which we do, there are companies that are very attractive because the Korean market generally is cheap. So if you find one, and because of volatility in the Korean market, which is very high, you can make a lot of money on individual companies that are well run, that treat their investors well. But as a whole, I think there needs to be significant institutional changes to taxes, to governance before you can see a truly wholesale improvement in the Korean market.
So, we're trying to make money in these markets, and sometimes we're making choices about how to make money rather than, what we think should happen or what we think, might happen. China is an example. A lot of people still bemoan what they see happening with regulation and with China growth and all that. Yet the markets have actually had a bounce here. Walk me through again why you're still cautious on the Chinese equity market.
Sure. So we invest one company at a time. And because of that, we look not just for companies that are good businesses and are cheap and are run by people who will take care of minority shareholders. In China, ever since, say, 3+ years ago, when Jack Ma was hauled in, that was almost, sort of a mark in time when you could see a dramatic change in attitudes toward how businesses would be treated and how capital would be allocated across the economy. So we moved from a much more business-friendly environment to one which is much more centrally controlled and what some people call, we don't particularly call it that, but the second cultural revolution. And in those types of conditions, it's very hard for us to find companies we can invest in because there's a binary risk. You might invest in a company with all the right attributes, and the next day, that industry is essentially nationalized. So those are not risks that we're willing to take.
Got it. Give me 30 seconds on what you like about India.
India is fantastic. It's a huge economy. The middle class is growing, so there's domestic demand for many of the products and services that the companies provide. It is very cheap to produce in. It has enjoyed many improvements from a fundamental standpoint because of the stable government, and will continue.
Yeah. All right, Belita, thanks so much for joining us. Belita Ong, chairman of Dalton Investments. This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.